Hello, everybody. Hope you're doing well. I'm Ethan Feller, stock strategist here at Zacks. And today I've got two stocks that check every box: value, growth, and momentum. And they both boast top Zacks ranks as well. Lately, we've seen a flood of major economic news hitting the markets almost daily. But despite all that noise, broad markets and even the leaders have essentially been unchanged over the last 2 months. Market is essentially trading an holding pattern. But the two stocks I'm going to share today are bucking that trend and showing a lot of strength, while a lot of other stocks are kind of flatlining. So stick with me, and today I'll tell you about Dana and Fibro Animal Health and share why they're compelling trading opportunities. So I want to note that today I found these stocks by using the Zacks.com stock screener. So to find stocks with both growth and value, I tend to filter for stocks with a PEG ratio below 1. The PEG ratio is extremely effective because it identifies stocks with both a cheap valuation as measured by its forward earnings multiple, but also helps to avoid value traps because the valuation is discounted by earnings growth forecasts. So basically, the earnings multiple is divided by the earnings growth forecasts, and that gives us the PEG ratio. And then I also filter by Zacks rank, and I only look at stocks with a Zacks 1 or 2 rank, which indicates upward trending earnings revisions. And I also filter for stocks with positive price change over the last 4 weeks, which helps me pick out, stocks that are on the move or moving higher. So it gives me that mix of value and growth, which I get with the PEG ratio, and then momentum, which I get with the price change, and then the Zacks rank. So all of that together makes this a pretty powerful filter. And, I've used a lot of stock screeners over, the last 10 years of following markets, and I tend to really like the Zacks one, so I really recommend using it. So let's get into it. So Fibro Animal Health is the first one we're going to look at. You can see it has a Zacks rank 2. Yeah, and Fibro Animal Health, it's a global animal health and nutrition company. They develop and manufacture medications and vaccines and nutritional products for livestock and poultry and aquaculture. They focus on disease prevention, enhancing productivity of farms and food safety, and they help farmers and food producers worldwide. Most of their revenue comes from medicinal feed additives, so they add sort of this medication and nutritional products into the animals' feeds, and it helps the animal health and the farm's efficiency. So we can see it has a Zacks rank 2 with upward trending earning revisions. It also has really good style scores. You can see value, growth, momentum, and then VGM, which is all of them together. Industry rank is pretty high, top 27%. And yeah, first we can see, it's got these upward trending earnings revisions. Surprised it's not a 1 because you got unanimous revisions higher, and you can see 7.5%. They've raised earnings estimates for the current quarter, and it's really across the board. They've raised earnings estimates. And then looking at that PEG ratio, so you can see we have a forward earnings multiple of 14 times, and we have earnings growth over the next 3 to 5 years of 26%. That's really compelling. It's got a PEG ratio of just 0.55. And again, I really like, if you can find a stock with a low earnings multiple, you really decrease your downside risk. It's that margin of safety. And, it's just a reasonably valued company. 14 times earnings, and it's got fantastic earnings growth forecasts. Let's take a quick look at the stock. And yeah, you can see it's been charging higher. Over the last year, it went from 11 to 25. It took a little break, had a little correction, and it began moving higher again. So yeah, it's always good to see a stock that has strong momentum and a reasonable valuation. So, a stock is generally, over the long run, its stock is gonna reflect the rate of growth of its earnings. So if they're expecting earnings growth of 25% annually or 26% annually over the next 3 to 5 years, and it's got a reasonable valuation, I think it's a reasonable expected return for a stock like this. And livestock health is not something that's ever going to go out of fashion, and farmers are going to always, people who raise agriculture are always going to, or raise livestock rather, always going to be wanting to take good care of their animals. The second stock we're looking at is called Dana. The ticker is DAN. Dana is not a well-known company, but it's one of the leading suppliers of drivetrain, automobile industry, drivetrain, sealing, thermal management solutions for all kinds of vehicles, commercial trucks, in the off-highway market. They provide axles, drive shafts, transmissions, and electrical propulsion systems. They are a leading supplier to electric vehicles and hybrid vehicles. So they're in a good vertical, and they have growth catalysts because of the position. We can see it's got a Zacks rank 1, so it's got upward trending earnings revisions. We can see its forward earnings multiple is just 10.5 times, quite low. And then earnings are expected to grow 15% annually over the next 3 to 5 years. And you get that PEG ratio below 1, it's 0.7. You can see earnings are expected to grow 80% over the next year. So that's good. They have an influx of cash, which is always a good position to be in as a company. And then we can see it's got upward trending earning revisions. Only one downward revision over the last 2 months. Current quarter earnings estimates are up 11.1%. Next quarter, 25%. You can see we got this one is lower by 1%. They lowered it by a penny. And then next year's earnings are up 15.4%. So it's just well positioned industry-wise. It's got good growth forecasts for its profits, and it's got a reasonable valuation. We'll take a quick look at this stock as well. And yeah, this has a really nice technical setup. The main reason I decided to share it today, you can see it built out a bull. Obviously it's got very strong momentum. Since November, it's gone from 7 to 16, so it's more than doubled. About double, 760 to 15 to 16. And you can see it built out this flag. It broke out aggressively, and it's forming another flag here. I will say, you can see the earnings are coming up 20th, so a week from today. And, maybe it trades sideways into there, and maybe you don't want to buy at earnings. It could be a binary event. But, it might just break out before too, and maybe take you buy the breakout above 1630. You ride it, for a few days, and then maybe take some of it off into earnings. But yeah, having a top Zacks rank, good PEG ratio, and strong momentum, it's just, you got multiple variables going for both of these stocks. And yeah, that's it. That's it for today. Thank you for tuning in. I hope you found this breakdown helpful. If you did, be sure to like and subscribe and stay locked in for more stock insights. And don't forget to check out our latest promo at zacks.com/promo for exclusive research and top stock picks. Thanks. Have a good day.